We are opening this week with lots of news about the Bitcoin death cross on the daily time frame. But as you know, over here on this channel, we just worry about trading what we see. So we're going to get into that. We're going to look from the daily time frame down, see what's going on the lower time frames, how the market is opening so far, and hopefully get an idea of what to expect for the US session a little bit later on. So if you're new here, welcome. If you're returning, welcome back. I'm Annie and this is Trade Travel Chill. The other bad news is that I have just returned from my holiday in the Maldives, and it's never a good time when we get back. Anyway, can never get too much Maldives. It was an amazing break. But let's have a look at this death cross information. If you don't know, a death cross occurs when the 50-day moving average of an asset price falls below its 200-day moving average, often interpreted as a bearish technical signal indicating potential downward momentum in the medium term. And if we have a look at this here, what you'll see is that when the death cross actually really does occur, it's usually actually towards the end of the downtrend. So most of the damage will already have been done by the time a death cross shows up, because of course EMAs are lagging indicators. So you can see here that it's potentially positive news soon to come. We have a look at the Bitcoin chart on the daily. The death cross that people are talking about is this one here, with the blue being the 50. Well, on my chart, I use EMAs because I think EMAs are more relevant to Bitcoin price action than just simple moving averages. But this blue one is the 50 and the yellow is the 200. And you can see here that they are about to cross. But as you also can see, since Bitcoin's all-time high, we're already down 25%. So a lot of the move has already potentially happened. And you can also see here that we have wiped out a lot of liquidity that we were talking about over here on this channel. So this whole section here between the 97.5 and 101.5 is now gone. That got taken out on this final drop here. We did have high-level long orders late last week in the 94K region. We wanted to see if that level was going to hold. I mean, is it holding? You know, look, we do have what now 1, 2, 3, 4 daily candles in that area. So you could say it's holding, but this isn't usually the type of price action where I see a meaningful reversal. So when I say meaningful, let's go back to here. You know, looking at this period of time here, Bitcoin also ranged for a really long period of time, but we didn't see any signs of a reversal until we had this meaningful spike to the downside and a strong hammer close that left behind a pretty large wick. And then when we tried to repeat the level, we created the higher low. That right there is a very, very good type of price action to be looking for when you're looking for a change in trend. Can happen both ways. In this case, we're looking for the trend to resume to the upside. So if that's what we're wanting to see now, that's not really what we have. So when we go really to the lower time frames, you're going to see that there is a little bit of a bounce happening today. However, it's not the kind of bounce that I personally think is going to lead to a huge move like this. A huge move like this at TTC, we call it a Linda because it's a very high risk to reward trade, and you know, gives a massive, massive multiple. So I'm not seeing signs of that potential just yet. And that could mean that maybe we're going to come up, create yet another lower high, and maybe we're going to come down for this lower liquidity eventually. But we are in the right zone to be looking for changes in trend. So the next zone of liquidity that we had was between 88.8 and 95.8, and that's pretty much where the price is now, sitting in that area. Whilst it is, I can tell you for a fact that people are definitely buying in this area because we have opened new liquidity. And let me just show you what that looks like. So when I add this indicator to the chart, you'll see here this bright yellow area right here. That wasn't there previously. So whilst we were waiting for price to move down, the zone that was really quite bright was actually this prior zone. And now that's moved a bit lower. And that tells me that on this move down, people have bought the dip, and in buying that dip on leverage, obviously, it's opening more levels of liquidity down below, or basically where people will get liquidated if we keep moving to the downside. Now, the other thing, I just want to take a quick look at the weekly time frame, because we talked about the 50 EMA and how on any major retracement in this current bull run, the 50 EMA has held as support, and we didn't want to see it break support, what we can see here is that we had a weekly candle close below the 50 EMA. So that's really not great news. And again, it's yet another reason why I had my line in the sand that if Bitcoin dropped 100K, I'm out. So the rest of the cycle, even if we do resume to the upside, I will just be doing that as trades, not as holding spot or whatever. But we can also see that this particular chart here was drawn really a long time ago, and it basically gave you my target for the cycle. And I had two targets. The first one was between 124.6 to 129.4, and the next one was 138.8 to 143.7. So again, Bitcoin did go to my first target. So the timing was right for me. The target was right for me. And all of that just made sense to take profit on the cycle. This was my cycle high target. So we've reached it. So I took profit. And now I'm happy to trade the rest until the direction is clear. Now, is it possible that we reclaim the weekly 50 EMA eventually and go up to my second target or beyond? Yeah, it's possible. I don't have signs of that just yet. But if you want to remain bullish on Bitcoin, you absolutely need the price to reclaim the weekly timeframe 50 EMA at a bare minimum. So the daily we've talked about, also as you can see in my white circles here, are marking out for you to make it very clear that even with basic technical analysis, since the all-time high, we have created lower lows and lower highs. That is a bearish trend. Even if it's just a bearish trend for now, it is a bearish trend. And we have moved under all of the EMAs. So any move to the upside, we need to be looking on the daily time frame to see if they create yet another lower high. That's going to give you a hint. We are still, in fact, bearish. So now let's go down and have a look at lower time frames. We're starting on the 4-hour time frame, and this is the area to be looking for reversals. Even though it doesn't look strong yet, we need the US session to open to see if US is going to bring in any volume. But the reason I say this is the area to be looking is because we definitely have our 4-hour time frame level 1 drop, came back into our area of interest, which then fell into the level 2 drop. And if you've been watching this channel, you will know that we were expecting this final level 3 drop, which we got last week, right into the level 3 target, which was between 93.3 to 94.6. And what that means then is we need to look for signs of reversal in this area. And because all of this played out on the 4-hour time frame, we go down to a lower time frame to see if we can catch that nice and early if it's going to happen. So what we can see here is that US on Friday continued the trend to the downside. And then as usual, we went into the weekend trap where the price just goes sideways for basically the whole weekend, keeping traders in trapped open positions. As the week starts, we expect a false move. The false move can happen Sunday night, I'm talking New York times, Sunday night, Monday, even sometimes potentially into Tuesday. So in this case, we can see it happen Sunday night. We fell out of the weekend trap to the downside. So what that did was liquidate anyone who was in long positions through the weekend, expecting a trend change. Once the false move is done, that's when they make the real move. So what we're looking for now that we can see that false move, we're looking for the real move that's going to take us through at least the first half of this week. Can it go longer than that? Yes. Why? Because when we zoom out, you'll see that we have actually been in this downtrend really for 3 weeks now since this peak formation here. So sometimes that can lead to a few weeks of upside. So this really is a good spot to be looking for a long position on confirmation that could lead to pretty good risk to reward trade that you might be able to hold for anywhere from a few days to a few weeks. So it really is the time to concentrate, but again, only act on confirmation because the downtrend is very, very strong and because we have such a high level of liquidity still below the current price. So then what are you looking for? That's when we come to the 15-minute time frame to see what has happened so far today. And at the time of me filming this, there's still 2.5 hours to go of the UK session. So we're really trying to get some hints as to what the US session might bring. Now, here's what we need to pay attention to. First of all, the low of the week was created right before the dead gap zone opened for this week right here. And then price has spiked a number of times off that low of the week. That's actually a very good sign because the low of the week and the high of the week are two very, very strong levels of support or resistance. And especially if you can get a reversal formation at one of those, it's a very high probability trade. So what we have so far today is a pretty good reversal formation here. We have a V bottom, which is, it's the one that I mostly talk about on this channel. And actually, we've been getting a lot of V bottoms and V tops instead of Ws lately. And they are hard to catch. It takes an extreme amount of confidence in your trading system to catch them. It takes an extreme amount of confidence in your level counting. So as you'll know, I said to you that I believe this was the level 3 drop. So aggressive traders would take a chance on price action like this with hammers, multiple hammers like this at the low of the week. Aggressive traders would do it. However, traders that need more confirmation, which should be anyone who is still learning to trade, they should wait for price to get back above the 50 EMA and then consolidate above it where the 50 EMA acts as support. So you can see that that's what happened today in Asia. So that's a good sign so far. But I'll tell you what just is one caution just in case. What I don't like so far about UK is that UK has consolidated so far. Now, listen, by the time this video actually comes out, this may not be relevant because we're literally at the initial high of the day right now in the UK. But what I don't like so far is that the UK is consolidating at the initial high of the day. That's not usually the UK's behavior. UK's behavior should run a trend. So that leaves me to be a little bit worried about today. And also, one thing I'm going to be looking for before the UK session ends is a potential stop hunt high, and then maybe US if it gives us a nice slow trend down, that would be great because that's going to give us a good chance to enter for the conservative entry. But if a play like that happened, I would be confident that we're eventually going to move up, maybe after the US session, because what it means is that the UK just swept the Asia high liquidity. Once it does that, it usually then goes for the low. So it will come back to this initial low of the day here, which is at about 94,675. And if it creates a higher low there, then you feel more confident that we're about to start at least the 3-day trend to the upside. So yeah, it's really, really tricky right now simply because UK is not trending, it's consolidating, and that's not ideal. But at the end of the day, what we can ascertain for certain is that we currently have trap traders down at the low of the week. Okay, there's no doubt about that. We've got this huge wick here, high volume candle, and at this point in time, the price has not returned there. So any market structure above this trap trader zone should be treated as bullish. But if we start to come down into that zone and you don't see similar candles like hammers, star formations, railroad tracks, bullish engulfing, things like that. If you don't see any of that, then this was just the fake move for today, and we're probably coming down into that lower level liquidity. I do expect a little bit of a recovery, just to be honest with you. I feel like we will get a bit of a recovery from here and that this probably is the low of the week that is in. However, at the time of filming this, that's not confirmed, and that's why I have to give you all scenarios of what to look out for, especially because I'm filming this before the very first US session of the week. And I don't also currently like all of these wicks at the initial high of the day. When we have a look at all of the liquidation levels, we can see that there's a pretty large level here at 96,340. So again, if the UK can break the initial high of the day and give us a spike into that, maybe it's going to take that, then come down, hold the level, give us a chance to enter for a future long position. But other than that, we've got this one level here at the top of the trap trader zone for a move to the downside. And then there's nothing, like everything else is really far below. So US would have to be super bearish in order for us to start coming down to these levels. So let me give you that scenario because it actually is possible. If the US is going to be bearish today, this is what we need to look for. And actually this candle right here is a very, very good example as it's forming right now. This is a very large wick to the upside that has only just spiked above the initial high of the day. And if that closes exactly how it looks right now, that's going to be an inverted hammer. And that's a very bearish signal. When you see that at the end of a session or the start of a new session, it's a pretty big sign that we're going to head down. So if you were to see something like that, I mean, this candle could end up actually being it, or it could come a little bit later in the UK. But if something like this were to happen today, where we get this spike that is just above the initial high of the day, and then we move back into the zone, and then US opens with a lower high, that's going to be essentially an M formation, and that's going to be bearish. And if we get something like that, then these trap traders may get released and we may come down for this lower liquidity. And that would mean that this was just a fake bounce today. So I would say, whilst it looks okay on smaller timeframes that we've had a move to the upside, this is far too weak to be the beginning of a trend change. And I would say because of that, it's okay to take chances on long positions if you're already in them. Either take your profit if we haven't broken the initial high of the day by the end of UK, or at least protect those trades, move your stop losses in case the US brings volatility and actually continues the move to the downside. When we get the peak formation low that actually changes the trend, it doesn't usually look like this. And that's why I'm remaining very, very cautious for now. I do have long positions, to be clear and honest, but I will be watching the US open like a hawk to decide if I should close them. And I also still have my short positions. I'm covered either way, and I'm just waiting for something that feels a little bit more probable before I make my decision on which way to close it. Now, when we have a look at the liquidity, what I do like is this big patch of liquidity right here. This sits between about 97,000 to 98,000, let's say, and that would mean a 3K move to the upside. So again, if we keep these trap traders trapped and we create a higher low, it's going to be a pretty decent, at least short-term trade back up into that area of liquidity. So that's why, again, it's worth taking a chance on, but also don't get carried away thinking you bought the dip yet, because the dip needs to be proven when the US opens. Now let's go and have a look at the buy orders to see if they can give us a hint of anything that's going on. Where is the big money wanting to play games? And as you can see, the big money is still shorting above this current zone. So in the last candle, they were sitting at 96,100, and in this current candle, they're sitting at 96,200. So yeah, they're not letting us get up into that liquidity just yet, but there are some significant buy orders at 93.5. Now, if we came all the way back to 93.5, that would create a second side W, because that would be around here, and it would keep these trap traders in these wicks. It would keep them trapped. And actually, that would be a great entry. I'm not going to lie to you. If that happened, that would actually be a great entry, because that would be a very large multi-session W. 93.5 is about here. Something like that. That would give me more confidence in a higher time frame move to the upside that may last longer than a few days, but it would mean that the US is going to be bearish today, which may look a bit scary, because that's actually a long way down. For it to come back all the way here, that's a long way down, and that may scare some people out of their current long position. So just be aware of that anyway. Now, we also need to keep in mind some news events that we have coming up, but I will say, before I get into the news events, I'll let you know, if this does confirm, we do get either a second side W, let's just say this all plays out, basically what it means is that the range is going to be set. And if the range gets set, that is going to be perfect, not only for you to get your next trading position, but for you to then open the bots. So as you know, I've been waiting as the price has been heading down and making new lower lows. I've been waiting to open new bots. This will be a good time to do it if we get a higher low. Even if they're just short-term bots, it's going to be a really good time to do that. So that's what I'm watching out for now. If you don't know how to set up trading bots, we have a free course that you can do. The link is in the description down below. All you need to do is join Pionex. And whilst you're doing it, now is actually the perfect time to join Pionex, because they have the biggest deposit bonus of all time, I think. I'm pretty sure it is. But right now, if you deposit $100, you can get a $200 bonus. There's only 9 days left of this, but depending on how much you want to deposit, you get a multiple on your deposit. And that allows you, if you're new to bot trading, that allows you to try any one of these two bots here. Just get a feel for how it works. And you're trying with the bonus money, not your real money. So you get to try it before you actually then go and put real money into the market. It's really an awesome deposit deal. So check that out. The link is in the description. You'll need to join with that in order to get access to this. And then, like I said, on the page, you'll see the two bots that you can copy to redeem that. And also linked down below is the free course, 100% free bot trading course if you need it. Will take you under an hour to do it. And so if you've never done any bot trading before, that's going to help you to understand what's actually happening and how they're all going. So let's now go and have a look at these news events that we've got going on this week. US government has now reopened, so expect backdated US data to be released over the next several weeks. A key for markets will be how much data is released before FOMC on December 10th. The less data released, the less likely a Fed cut will be. The current odds are 44%. We've also got FOMC meeting minutes are going to be released on Wednesday. Given the focus on the divide of FOMC members for a December cut, markets will be dissecting the minutes for more clues on the Fed's next move. This has a higher potential to move markets. And then on Thursday, we have US non-farm employment. This news is likely to influence Fed rate cut odds, so it has a high potential to move markets. Friday, we have flash PMI and consumer sentiment, their secondary items. We also on Friday have US stock options expiry. They can cause volatility as well. And Wednesday, we have VIX options expiry. Also Wednesday, we have the NVIDIA earnings. And this is one of the most important stocks driving overall price action of the S&P. This is always a closely watched earnings release. Conference call starts at 5 p.m. New York time. There's been a lot of capital outflows from AI stocks lately. This could impact both stocks and crypto. Now, this was the one I was hoping that we were going to have a run up into these earnings and then potentially a sell off after. Looks like it's happened the other way. We had to sell off instead. Oh, well, can't get everything right. But this is definitely going to be a major day as well. Wednesday's a major day for many, many reasons, and it may explain why we're having this temporary bounce, because often if there's going to be a sell-off, we will move up before down. So those are my thoughts on the market now. Just for a short-term trade, this is what I'll be looking for. I'll do some more high time frame macro stuff later on during the week. But in the meantime, leave me a comment down below and let me know how you're feeling about the market. Are you still bullish, or do you think that this cycle is over? The markets definitely look like an absolute mess right now, but they are not more of a mess than my current apartment renovation. So let me know in the comments down below. Do you think my renovation will be complete before or after a Bitcoin new all-time high? See you guys on the next one.